Hey, greetings. Dr. Jeffrey Scott here. This is my Market MRI Pro update for Wednesday, February 4th, 2026. All I can say is what a crazy day in the U.S. markets. I'm doing this video at 8:45 p.m. We'll talk about some of the earnings that came in after hours, some of the divergences in various groups and sectors and markets. Right now, I always like to lead off with where the futures are before I even get started. So we know from a point of reference, Dow futures are up 43, E-mini NASDAQ's up 133, S&P's up 25, gold is up 38, Russell's up 13, and I thought I hit silver is up a little bit less than 3. So futures are actually quite strong right now, which may be a surprise, maybe not a surprise. Let's go ahead and kick this off. So I titled today Divergent Markets. So as individual industries crack, can a massive rotation prevent a major sell-off? And I think that's the question. This market, in many ways, feels like it's topped. And one might expect this market to sell off hard. Yet, it's as if various things get taken out to the woodshed and shot, and then the next day they're okay. We've had Bitcoin selling off hard. The metals went in kind of climax runs, sold off, but are holding on. Today we saw some of the data center plays gets taken out and shot. Look at Micron down 10%. Yet, when you look at the overall markets, our breadth was higher. So it's an interesting day. Again, my name is Jeffrey Scott, marketmripro@gmail.com, Google Group's top-down trader, and my website's marketmripro.com. Disclaimer, this is for educational purposes only. Anything we talk about should be taken in the spirit of education, not investment advice. The intent of the video is to demonstrate the tools of top-down analysis, how I apply them. Trading involves risk. You and your loan are solely responsible for any investment decisions you make. I may own or intend to buy or sell any stock mentioned. Trading stocks and options should be considered risky. Should always be consulting with your financial advisors, and I have tools for multiple platforms, but am an independent trader. I always like to mention my Google group. This is the only mailing list I keep. And why does it matter? Because, well, I don't always post my videos on YouTube, and I certainly don't post my options trading on YouTube without disclaimers that I won't get on a YouTube video. And so there are things that I'll post there every night. When I do post something on YouTube, I'll give you a heads up with a mention on the Top Down Trader website that go ahead and take a look. And I'll give you additional discounts on my products from time to time. What else can I say? It's free. So this really tickled me yesterday, and it was in sentimenttrader.com, one of these things that I've subscribed to forever. And I love reading their little things that come out about the market. So I thought I was the only person around that was talking about Hindenburg Omens on the NASDAQ, because the classic Hindenburg Omens on the NYSE. But I've tried to make the case that it's meaningful on the NASDAQ, and the fact that we have such a different set of stocks in the NASDAQ, technology versus what's in the NYSE, banks and energy, that maybe we need a broader Hindenburg Omen. So they basically came out, talked about it, talked about how many times it's fired, and then they showed what happens. And I think this was interesting. You could see that if you look at 1, 2, 3, 4, 5, 6, or 12 months later, the mean and the median improvement in the NASDAQ Composite is flat to negative. All right. It's positive about half the time, a little bit less at 3 and 4 months. But the actual mean and median movement is not favorable. You could see we've had some really bad max losses, 11% at 4 months, 12% at 5 months, 14% at 6, and 19% at a year. And you could just come in here and look at some of these that were really bad. 1989, there was a number of really bad movements, 46% at a year. Those are the average losses and the average gains. So if you look at this, it's not a good signal. And no, it doesn't mean you have a massive sell-off. You can get one. And boy, have there been bad years. If you just look at 6 months, 22, 21, 16, 20, 13, 13, 13, 29, and 21. Those would have really hurt your performance on the year. So I'm going to heed the NASDAQ Hindi as well as the NYSE. More to follow on that. Now, I think the jobless claims, which we should get in the morning, are going to be pushed back a week. We'll get Bostic in the morning, and then I suspect the monthly employment report might be pushed as well. I didn't hear about that one. Earnings on Wednesday of note. Alphabet was all over the place. I think the most extraordinary thing was the amount of capex that they talked about versus what was projected, much, much higher. So they are down just a bit, 1.7. They were going as low as 320, as high as 340. I think I just looked, they were 331. AMSC, semiconductor company, up 19.4, form factor 18.3, SITM 13.8 on earnings. CIEN was up nearly 4% as it's being added to the S&P 500. DGII minus 16.4, ARM minus 9.4, Qualcomm minus 9.3 were the big losers. So mixed at best. And don't forget what we have on Thursday: ConocoPhillips, Bristol Myers Squibb, Shell, Cigna in the morning, and the afternoon, Amazon and IREN, among others. Roblox, Reddit, Affirm, Altasian. So a lot of earnings. As I say in the lower right, it is a judgment call to hold stocks over earnings dates. It is bad judgment to not know when your stock's earnings date is scheduled. Any information you want on things I talk about, questions for me, comments that you don't want to put out on YouTube, marketmripro@gmail.com. I'll respond individually. And if you own the program and you're having any issues, coding at marketmripro.com. See you in Florida in the third or fourth quarter. I should be announcing dates soon. Let's go to the charts. So if we start here, volatility was up today. Shocker. I'm joking, but yeah. The only surprise, it was only up 1.39. Diamonds actually finished up 0.5%. Dollar was up 0.33. Spider was down 0.5%. Russell 0.86. And the big loser were the Qs, down 1.75. And lo and behold, the bigger loser and the biggest loser of late is Bitcoin. And just look at this. 17.7% down in the last 5 days. Bitcoin is being slaughtered. I was listening on CNBC, and someone was asked. There was a congressional hearing, and someone was asking Besson if there's going to be a bailout of the Bitcoin. Just laughing. On the new highs minus new lows at 12 months or 52 weeks, very positive on the NYSE. And here's your divergence, barely positive on the NASDAQ. And notice how high the negative number is on the NASDAQ. Another divergence. If you look at participation, 72% of the S&P 1500 was up today, 63% of the NYSE, yet only 38% of the NASDAQ. To me, that's a big divergence. And you could see in the percentage of sectors and industry groups, very different when you look at the blue ones versus the green one. And if you look at S&P 500 sectors, materials up 2.35, energy 2.25, real estate 1.59, staples 1.3, and the biggest loser is, drumroll, technology down 2.79, communications 0.8, discretionaries 0.74. The leadership, solar. We'll look at TAN at some point today. home construction, cannabis, who cares, oil, gas exploration, Internet of Things somehow was positive, transports, retail, infrastructure, Asia software, gold miners. What got killed? We'll start with at minus 6.91 uranium, copper 4.57, blockchain 4.49, clean tech 3.94, semis 3.94, gaming 3.83, social media 3.75, robotics, artificial intelligence 3.25, defense another 2.37, and somewhere we're going to find data center here. Data centers got hurt. We'll look at the chart a little bit, or some of the components of data centers got hurt. It was a rough day. It really was if you were heavy in those groups. Now, what did it do to our timing model? Here's the daily charts. You could see the Qs have broken down substantially, took out this low. We'll look at them in more detail in a minute. The diamonds somehow are holding above the yellow line. The Russell continues lower, as does the spider. So all of these are in downtrends, except for maybe the diamonds. And this is the daily, so you see they're all except for the diamonds are in a sell signal. And here's what's new. On the weekly, we got a sell signal on the Qs. So I would say for me, I go to 50% cash if that holds. Now, we could get a big rally at the open and flip the weekly back to a buy. And remember, a weekly candle doesn't end until 4 o'clock. I'd probably give it to 4:15 Eastern for the last trades to come in. But if we continue and we see others break down, I'm going to rapidly liquidate and go to cash. I've already got a lot of puts on the remaining positions, but I'm going to look for a bounce. But my fears of a bear are growing. If we look at the U.S. index ETFs, let's open this puppy up. So, what's new today? Not much, except we went down and tagged this lower trend line, ended on this trend line, which sits right on the, let's see, this is the 50-day moving average. Nice place to see a bounce. The last couple of times we saw the 100-day, not that far away. So are we at a place where a bounce would be obvious? Absolutely. Am I certain we're going to get it? No, I'm concerned. If I look at the Qs, we broke down below the 100-day moving average. Where's the 200 at? The 200 is at 574. What did we close at? I don't know why I'm looking over there. I just got to look upper left. We closed at 600, so that's only another 4 or 5%. It could be in play. We just knifed through that 100 today. That does not look very good. If we look at the diamonds, it's hard to say anything negative about them. They're clearly in a sideways consolidation. Now remember what I said, middle of the month, we start to see some negative seasonality come in on all of these. And then if we look at the Russell, we peaked here with the shooting star and a high jump at 100. No surprise, and it's pulling back. Still above the 50, so it's actually holding up stronger. In fact, it's right about the 21-day EMA. So this one is worrisome. The Qs are down out ugly. The diamonds are strong, and the spiders at our place, they could bounce. Talk about divergent markets. If I look at volatility, we're not even coming down to this trend line anymore. And for weeks, I've been telling you volatility rises here, going into the middle to late March. I think we're following seasonality characteristics, and I think this market's going lower. That comes from a permabull, and this is something that has got me concerned. Yes, we closed way off the high, but we also closed now above all the moving averages. We are above the 200, the 50, the 21, the 17, the 100. I'm a little bit, not a little bit, I'm a lot concerned. And the dollar, big breakdown, working its way up, still well off the high, so I'm not too concerned about the US dollar. Yes, my tone has changed. Commodities. Kind of doing what you'd expect gold to do after such a big sell-off from here to here. And remember, we now got this measuring tool. Um, so if I went from the top here to the, I did that wrong. Let me try that again. I'm not good at these things. Just warning you. So I go from here to the bottom. That was a sell-off of 20% in 5 days. I guess that includes the weekend. I mean, not a massive sell-off, but we've sold off and now we're consolidating. Surprised it didn't drop down to the 50. If I look at silver, I think we'll see an even deeper sell-off from the top to the bottom. $41 points from top to bottom in 6 days. It's calling it 60%. I don't know if I buy that at 60%, but it's a pretty massive sell-off, and we're consolidating here as you would expect. What if the markets do that? Oil, which has been all over the place, was up today as the Iran-U.S. peace talks are on, off, on, off. When they're on, oil goes down. When they're off, it goes up. Natural gas consolidating after its big sell-off. So think about this. How many things have had a massive sell-off? Wait to see the NYSE. And then here is 10-year up a tad today, up 0.16%. Not much change. And here's the 30-year. Really looks like, it stayed mostly within the prior range, but was up 0.33. We just don't want to see it get above 5%. At least I don't. Buckets. Want to see what a nervous, crazy market is? We got lots above Bollinger Band, 17, and still 11 below. This is a market. What's the Hindenburg mean? It means the market has entropy. We got people selling, people buying. We got new highs. We got new lows. That's what it looks like when the Hindy's firing. The S&P 1500, we got 16% new highs, or stocks above, not new highs, stocks above the Bollinger Bands, I'm sorry. And over here, we're down to 12 below. The Russell 2000, I got 14% below and 10% above. And the NASDAQ, I got 19% below and 7% above. This is a schizophrenic, paranoid split market. You want to see split? NYSE all-time highs today, closing high and trading highs. The NASDAQ, a big breakdown below the 50. Who's going to win? This is the question. I mean, you saw what happens in the NASDAQ and small caps when the NASDAQ has the Hindenburgs. Well, here's your confirmed Hindenburg on January 29th. They saw one on Sentiment Trader on February 2nd. I think part of it is what are we looking at? Here's the NYSE with its confirmed Hindenburgs as well. I think this is a scary market. If you look at the NYSE, more stocks above the moving averages and new high, new lows, very high. The AD lines are positive. The up-down is positive. And then I look over here at the NYSE, we're selling off. The new high, new lows are basically flat. The AD lines are negative and the up-down volume is negative. And we're at 0.39, which is not quite reversal area, and 0.73, which isn't too hot. So if I just show you the NYSE, it looks like we're in the middle of a very bullish run. Yet when I look at the NASDAQ, I get nervous. If I look at ratio charts, Materials, communications, although they sold off today. Energy, staples look good. Industrials look good. Financials are coming up, as is real estate. And tech's in the toilet. I need leadership from tech. And then if I look at my larger market breadth just to see the greens, 0.69 on the spiders, 0.76 or 0.78 rather on the S&P 1500, 0.39 on the NASDAQ Composite, and 0.71 on the Russell 2000. Just want to see something. None of these are in the area that you'd expect a reversal. So I don't think there's anything that I see that would invalidate the idea that we're going to chop around here and ultimately sell off, except this. Very divergent markets. I'm not used to seeing this much of a divergence. Typically they run together. Now, one thing that I have said earlier, and I'm holding to it, is I ignore the Hindenburgs until I break below the 50. So I'm very concerned here. Very concerned about the NASDAQ. All right, well, that's no fun. Let's take a look at some of our sectors, see if anything has changed since yesterday. I'm going to go quick here because I've been pontificating way too long, but this is, I think it's deserving. Bitcoin, don't let the S&P, the Dow, the NASDAQ, or the Russell look like that. Not while you're still in stocks. Technology, broken down. Discretionary, breaking down. Communications, breaking down. Industrials, breaking out to new highs. Financials trying to get back, still below the yellow line. Energy, super strong, leading sector. And before I see what this is, materials breaking out again. Here is real estate. It's turned into a buy signal, but really is still kind of in congestion. Utilities, mixed, buy signal, but not breaking out yet. Staples, woohoo, broken out and running. Healthcare, nope. And there's Bitcoin again. There's some clear-cut winners and losers there. And let's look at those big stocks because the mags are not leading for the most part anymore. Amazon broke down today. Very disappointing earnings after close tomorrow. I kind of thought Amazon was going to take a run, so I'm holding some, but I had bought some puts on it, which is called caution. Apple, now is Apple starting to be the leader, breaking out here? Okay. Google, a little bit of a breakdown, trading kind of about where it closed, within 1%. Should be interesting to see how it trades tomorrow. Meta, after a big enthusiastic breakout with earnings, has pulled back quite a bit. Netflix, nope. Tesla, I want to believe, but Tesla seems to be joining the bear party right now. Nvidia, again, I want to believe, but this one seems to be pulling back. Both Tesla and Nvidia look like they want to test their 200s. I thought Nvidia was just going to go sideways to earnings came. I guess AMD didn't help today. Mr. Softy, a white candle, but really not much of an improvement today. Labu broke down after trading higher early on, still closing above the 50, so it's not dead yet. Pharma actually looks stronger today. Lilly earnings didn't hurt. Data centers have pulled down to the moving averages, a natural place to bounce. And defense has done what happens when you don't bounce, it's broken down. So things have changed a lot over the last couple of days. We go into the JAS layout, and I just wanted to start here by looking at some of the stocks today that got taken out. And some of them are leaders. Micron, What happened to SanDisk today? Big reversal there. Evening Star, kind of, sort of, down 15%. This is a nuclear supportive company, just broken down. Oklo, boy, this was a good run, and not this time. Uranium, CCJ, kind of looks like the others. Now, after hours, most of these are rallying a bit, so it'll be interesting to see if this is a one-day wonder or something worse. I am worried about the something worse, and those Hindenburgs and that analysis doesn't make me feel better. If we go on the top down, we got the sectors and industry groups of 3,800 stocks. Let's look at short-term momentum today. We got materials, energy, and real estate. Since defensive or staples is right there, we're going to look at those four. Now I've got the industry groups from there. Let's do the same thing. FM2, 1, 2, 3, 4, 5, 6, 7, 8, 9, and 10. Kind of a defensive looking group when you see beverages and discount stores, food confectioners, specialty retail, but then you see some energy and specialty chemicals. And that might be a place we're going to look at tonight, and I'll show you why in a few minutes. Now I could do the same here. Now I've got 186 stocks that are in these 10 industry groups from the leading four sectors. I just like to put my $5 and 500,000 filters on. Now I got 112. Do you notice something about these stocks in what was a relatively challenging day on Wall Street? Yeah, they're all green. Huh. Just go through Enphase, massive move. It's hard to buy a stock that after a day like that, you'd expect it to pull back a little bit. But it closed near the high of the session. It's got great seasonality. Earnings are out, and you could see it wasn't that it's growing faster than expected. It had a massive beat, 31% beat on earnings and revenue. Enphase. One way is to look at PAN, which is the ETF for solars, which also gapped up on this. RUN was another strong solar stock today. And its earnings are coming in a couple of weeks. So solar looks interesting here. MUSA is a refiner retailer of oil. Marathon Petroleum, similar classification, I believe. Is this the driller or the refiner? Downstream. Yep, refining and marketing. So I think that MUSA is mischaracterized by industry group or sector. These are breaking out. These are very volatile. They pay a 2.29%. Look at the earnings. $4, 428% growth, 45% surprise. Revenue, no growth, but not a big, but a surprise. Pays at 2.29. It's going to be $1.15 versus a minus 24 cents. Maybe MPC looks interesting here. So breaking out, that one looks good. Casey General Stores, boring as heck, but a nice little move up. Good volume. EXP, Eagle Materials, think of them as cement. Lin is the first of the specialty chemical stocks I believe that we've seen so far. I don't know everything about every company. Industrial gas. Specialty gases. MLM, another cement stock. PSX, Phillips 66, another refiner and marketing. Let's take a look at them. Their earnings are out. Massive growth. Surprises. Pays a 3.93% dividend. So we've now identified a couple of wolf packs here. Solar, energy refiners and marketers look good. Interesting things going on. VLO is another in that category. Valero breaking out. None of these are overly extended. Well, this one's a little bit extended, but still not 95, I don't believe. It's 90%. So it can bought. WLK is a specialty chemical, Westlake. Um, I would ignore the extension since it just crossed over the 200 and it's got inverted moving averages. Let's see what Westlake looks like up here. $1.39 negative versus 6 cents positive. Um, I don't love them. I'd have to know more about the industry group. Maybe that's not a surprise. Solar Edge is another solar stock, a little bit of a base and breaking out. So if you're looking to do for top-down trades, I always start with this type of an analysis. Since I mentioned that solar looked good, what you could do is kill the sectors. And now this should be all the different, let's alphabetize them. And let's just go down the list and find solar. Remember, I've got my filter on below, so it's not going to have all the stocks in it. I'm not looking at the very small. Let's just see what we got here. So N phase, big gap up, closed high, closed nicely. This is the one. Let's see. I'm going to leave this open here. Earnings the other day with a big surprise. Solar Edge. Earnings pending, but it's going to have 19 cents versus a minus $3. 33, I think, million versus 17 million in sales. I don't know if it's millions or billions. But wow, that's big growth considering the others. Is this one about to take off? JKS, Jinko Solar looks okay. Run, we just showed you breaking out. First Solar, which is the big daddy coming off a lower number, had a intraday reversal, but still didn't do bad today, down just a bit. Canadian Solar, too low. ARRY, and you have Shoals Technology Group, looks interesting, and ASTI. So the beauty of top down is you identify what's working and you start looking in that specific industry group. Are there any stocks that look good? Now the opposite of top down is bottoms up. So I'm going to clear my filters, go back to the impulse, and let's just look at my A plus scan. You might be surprised to see so many stocks here, considering that the market was so volatile, but breadth was up today. And I just want to point out a couple of specialty chemical stocks. Celanese Corporation, the fact that it's been down here below the 200 just tells you that if I put up a monthly, you got something that's been sold off hard. And it has been. But if we go back to the daily, come on. Back to the daily, you could see a nice uptrend, a retest of the 50, and a breakout here. I would ignore, again, the high jump because it's right adjacent to the 200. Volume has come in. Double momentum signal, relative strength at OBV looks good. I think Celanese looks great. And then there was another one on this list that I thought looked interesting. Let's see if I can remember which one. RPM is a specialty chemicals on the automobile industry, taking out the 200. Relative strength going up before price. Double momentum signal, good relative strength, and OBV. And I think there was one other, I just don't, it wasn't Lennox. This is Lennox, right? Kind of looks the same. Well, I think I'm going to leave it at that. I'm going to be looking at Celanese tomorrow. And again, earnings are coming out the 17th. It pays a 4% dividend, and it's looking at 89 cents versus $1.45. It's going to be all about the surprise, not the growth rate. Have a great one. Be careful out there. Just because I'm looking at Celanese and some of the solars doesn't mean I'm going to buy anything. I'm going to be cautious as heck. I don't want to be the last one buying, but I don't want to be the last one buying because if this market rolls over, it will take everything with it. One thing that would be tend to go up if the market sells off are the contra ETFs. Let's kill the filter. Let's just see what we had here. DOG, not really moving. Goes up when the Dow goes down. FAZ goes up with financials, kind of steady. SOXS will go up if semiconductors fall. Doesn't look like anything here. I wouldn't buy it until it takes out the 50. But notice that it is taken out relative strength above the moving average and OBV. S&P XS will go up if the S&P rolls over. This one's setting up. SQQQ will go up if the NASDAQ, this one broke out today. This one looks interesting here. I hate to tell you this, but it's got double momentum out of a squeeze with good relative strength at OBV. Again, ignore the high jump because it looks like it's at the top, but it's really not a high number. It's only 6.37. The risk here is you run up from where you're at on your close here, which was 71. Do you run up to this area here, which is 90? That's still over 20%, about 20%. I could live with that, or 25%. I think this one's getting ready to break out. TCA will go up when small caps go down, hasn't yet. So probably the one that looks the most interesting right now is SQQQ, which is the opposite of the Qs. So I will look and see how we open. I am triply concerned because of this here, the Q breaking down and giving me a sell. But I also know it ain't over till it's over, and it ain't over yet because that bar is still trading. Be safe. Don't be a hero. Not a time to go big in margin. And I'm lightening up. I can't tell you what to do. I don't know your personal scenario, but I think there's a time to be cautious. And it might be time to be aggressive to the downside, to be honest, but I'm going to start by being cautious and see how the rest of the week goes. Take care.